The crypto market right now is sending out two completely, and I mean completely opposite signals. It's kind of wild. On one hand, you have all this data just screaming extreme fear. But on the other, the biggest players, the whales, they seem to be making their largest bets in over a decade. So we're going to break down this high-stakes standoff and try to figure out what it all really means.
Okay, so here's how we're going to tackle this. First, we'll decode the fear that's really got its grips on the market. Then, we're diving straight into the great whale debate. Are they buying or are they selling? After that, we'll look at the one big economic event that could just break this whole deadlock. We'll find those hidden signals most people are missing, and then we'll wrap it all up with a clear outlook for the week ahead.
So, to really get a handle on this situation, we have to start with the emotion that is just absolutely dominating the entire market right now. And that emotion is pure, unadulterated fear.
Just look at this number, 5. The Crypto Fear and Greed Index, which is a really key barometer for market sentiment, has absolutely crashed to a score of just 5 out of 100. Now, for some context, anything below 25 is considered extreme fear. So, yeah, this is a level of panic that we just very, very rarely see.
And that fear, it isn't just a feeling on a chart, it's translating into real money hitting the exits. In just one recent session, the major US Bitcoin ETF saw a net outflow of over $272 million. That shows you that institutional and retail traders, at least in these regulated products, are running for cover.
And here's what's so crucial to understand. This index isn't just tracking the price. No, it's way more complex. It's looking at volatility, market volume, social media chatter, search trends, the whole shebang. A score this low tells us that the very foundations of market participation and confidence have been seriously shaken.
But, and this is a huge but, this is where the story gets incredibly complicated. Just as all the data is pointing to a market that's just paralyzed by fear, a massive contradiction pops up when we look at what the biggest players in the game, the so-called whales, are doing.
And this slide right here, this is the core conflict. On one side, you have data from BN Crypto showing that the amount of whale activity on exchanges is spiking. That usually means they're getting ready to sell. But then, on the other side, a report from CoinDCX shows that whales are accumulating Bitcoin in their private wallets off of exchanges at a rate that is literally historic.
So the bearish argument, which this analyst sums up pretty well, is that these whales are moving their Bitcoin onto exchanges specifically to sell. They're waiting for any small price rally, and then they're going to use the buying pressure from smaller investors as their chance to cash out and take some profits.
But the bullish case is just as strong, if not stronger. This report suggests that the smartest, most long-term holders are quietly pulling massive amounts of Bitcoin off the market completely. I mean, think about it. That's not a trading move. That is a deep, long-term conviction play, signaling they think prices right now are an absolute bargain.
So you've got this incredible tug-of-war happening. How does a standoff like this resolve itself? Well, this internal market battle, this fight between short-term fear and long-term conviction, is about to run headfirst into a powerful external force, a single piece of data that could act as the ultimate tiebreaker.
And I'm not exaggerating when I say the entire financial world, way beyond just crypto, is holding its breath for one specific economic report.
And that event is the release of the U.S. Consumer Price Index, or CPI. This number is our best look at inflation, and it's going to heavily influence what the Federal Reserve does next with interest rates. And as we all know, Fed policy has a massive, massive impact on risk assets like crypto. This slide just lays out the two most likely paths forward so clearly. Analysts are basically projecting a binary outcome. If inflation comes in hotter than expected, the US dollar is probably going to get stronger, which is usually bad news for Bitcoin. That could push it down toward that $50,000 support level. But if inflation comes in lower than expected, the dollar could weaken, and that could be pure rocket fuel for a crypto rally, maybe up toward that $70,000 to $80,000 range.
Okay, so with all these conflicting signals flying around, where's the real insight? The alpha. Well, it's found when you look one layer deeper than the headlines, into the details that show what's actually happening with the money.
So here's the crucial takeaway. This is not a simple everyone is selling story. Not at all. It's a really complex divergence between long-term conviction buyers and short-term ETF sellers. It's a rotation of capital, not an exit from crypto altogether. And it's a consolidation into the biggest, most trusted ETF, BlackRock's IBIT. That's a classic flight to quality when things get choppy.
And this chart tells that rotation story perfectly.
On the exact same day that Bitcoin ETS lost that massive $272 million, ETS for other major cryptos like Ether, XRP, and Solana actually saw combined inflows of over $34 million. That's a crystal clear sign that this money isn't fleeing crypto, it's just moving around and reallocating risk.
Okay, let's put all these pieces together. Based on all this conflicting data, what is the consensus outlook for the week ahead? What should we be expecting?
The bottom line is this. The market is a coiled spring. The tension between this extreme fear, the massive whale accumulation, and that big macro event has set the stage for a major move. You should absolutely expect high volatility around that February 13th CPI release. This is not the time for calm.
And these are the battlegrounds the pros are watching. A bearish, high-inflation CPI report could easily see Bitcoin test that support level down near $50,000. But a bullish, low-inflation report, that could send it surging back up to test that resistance zone around $81,000. That CPI data is likely going to decide which of these levels we see first.
And really, that brings us to the final crucial question this market is asking all of us. We are witnessing a clear battle between the short-term fear of the crowd, you see it in the ETF outflows and the sentiment indexes, and the deep, long-term conviction of the whales, who are buying like we haven't seen in over a decade. The direction from here really just depends on which of those two powerful forces wins out.